Today, we're breaking down everything you need to know from the U.S. stock market this past month. This is your May 2025 edition of the Monthly Market Report. No hype, no headlines, just the most important insights for regular investors. Let's dive in. The major U.S. indices had a mixed performance in May 2025. The S&P 500 closed the month up by 1.7%, driven mostly by tech and healthcare. The Nasdaq Composite surged 3.5%, continuing its upward streak thanks to strong earnings from AI and semiconductor stocks. The Dow Jones Industrial Average underperformed, slightly down by 0.4%, mainly due to weakness in industrials and energy. Investors are still grappling with inflation data, Fed policy, and corporate earnings, and that's been creating a lot of short-term movement. Inflation and the Federal Reserve. Inflation remains sticky. The latest CPI report showed prices rose 0.3% in April, bringing the annual inflation rate to 3.5%, slightly higher than expected. The Fed's preferred inflation gauge, the PCE index, also ticked up by 0.2% month-over-month. This complicates the Fed's path to rate cuts. As of now, the Fed has held interest rates steady, but investors are now pricing in a 50% chance of a rate cut in September, according to the latest FedWatch data. Why it matters for you? Interest rates directly affect mortgage rates, credit card interest, and stock valuations. High rates generally put pressure on growth stocks and the overall market. Sector highlights. Tech sector. AI-related names like NVIDIA, AMD, and Supermicro had another blowout month. NVIDIA, after its earnings report, jumped 12% as demand for its chips continues to explode. Healthcare. Johnson & Johnson and United Health posted solid earnings, driving confidence in the sector. Biotech also saw a small rebound. Energy. Oil prices slipped below $74 per barrel in May, pressuring energy stocks. The Energy Select Sector ETF dropped around 2%. Financials, mixed results. JP Morgan stayed strong, but regional banks are still facing headwinds. Keep an eye on credit trends and loan delinquencies. This past month wrapped up a solid earnings season for Q1 2025. 79% of S&P 500 companies beat earnings expectations. Big winners: Microsoft, Meta, Amazon. Misses: Ford and Boeing struggled with costs and guidance. Companies that showed strong balance sheets and pricing power were rewarded. Weak forward guidance dragged some stocks lower even if their earnings were solid. Major news and policy moves. Treasury yields stayed elevated, with the 10-year yield hovering around 4.5%. Debt ceiling debate is brewing again in Congress. So far, it hasn't rattled markets, but keep it on your radar. Job market remains robust. Unemployment is still low at 3.8%, and wage growth is steady. Consumer confidence took a hit, showing some signs of weakness in discretionary spending. Here are 3 lesser-known names that quietly outperformed in the last 6 months. Duolingo, up 34%, strong subscription growth, entering enterprise space. Vertiv Holdings, up 40%, riding the data center infrastructure wave. Supermicro, up 45%, still growing rapidly in AI server space. These aren't meme stocks. They're companies with real earnings and trends behind them. So what should you be thinking about right now? Stay diversified. Tech is leading, but don't ignore value or international exposure. Keep an eye on inflation. It's still a wild card and will influence Fed policy. Stick to your plan. Don't react emotionally to daily news. Dollar cost averaging still works. Watch valuations. Some sectors are starting to look pricey again. So that's your market pulse for June 2025. Hopefully, this gave you some real insight, not just noise. If you found value in this update, and comment below with the stocks or sectors you're watching. We might feature your pick in next month's update. Until next time, invest smart and stay informed.